Hi there, welcome to Kneppy Invests. Now, I thought I'd do another financial year 23 result video, viewer requested, and this is on BHP. Very excited to do this video today because my opinion on BHP hasn't changed all that much, but my respect for the company probably has increased a little bit in preparing for this video. And in fact, even though I would say most mining companies, if not all mining companies, are not high quality companies simply because they are price takers, they don't have a say or not much of a say in how much they sell their commodity for. If I had a choice, and only one choice, of any mining company in the world to invest in, it would probably be BHP. Now, BHP has been around for a long time, founded in 1885, and right now it is the largest mining company in the world by market cap and third largest by revenue after Glencore and Xinjiang Copper, a Chinese company. And by the way, Rio Tinto is the second largest mining company in the world by market cap. Fortescue is eighth, and South 32 is 39th. Yet South 32 was spun out of BHP in 2015. Not only that, BHP's market cap is more than double that of Glencore, which is the third largest mining company in the world. So not only is BHP the largest mining company in the world, maybe the best mining company in the world, it is also the largest company on the ASX. And funnily enough, when I looked at the chart for BHP, a monthly chart going back to 1990, this company has done really well over the past 30 years. In fact, if you just break it down into the last 5 years and 10 years, this company has given their shareholders a return of 11% per year over the last 10 years. So that includes share price appreciation and dividends, and 18.6% per year over the last 5 years. So even though I would describe this company as low quality, I think it's an okay investment for the long term because this company just keeps on getting bigger with time. Now, I was supposed to be doing a video on Elders, and I'm still waiting for this company's results, which should be released within the next few weeks. And after they do release the results, I'll do a video on this company maybe a week or two after. So look out for a video on Elders in about 3 weeks' time, so towards the end of November. And the next 5 companies I plan on doing in this series include eCargo. Really excited to do a video on that company because I know nothing about eCargo, and I have prepared that video. And to be honest with you, I can't really describe what the company does, even though I've already prepared that video. And then we'll do a video on Nanosonics, which is a company I own, Red 5, ARB Corporation, and Johns Lynn Group, which is another company I also own in my portfolio. Now to the whole reason I'm doing this video today, and that is looking at the financial year 23 results for BHP. Now, I would say this company is low quality, and you will see when you look at the historical results that the company's revenue, the company's profit, the company's operating cash flow and free cash flow can be quite volatile from year to year, particularly when you look at 5 years in period, because this company's financial performance is highly correlated to the price of iron ore. It's not quite as correlated probably as Rio Tinto and Fortescue, but definitely iron ore is the main driver behind the success of BHP. Now, this company also reports in US dollars, and so I did have to do some calculations to convert some of these metrics we'll see later in the video to Australian metrics. But you can have, or there is some platforms who will do a currency conversion for you. I think Guru Focus does that. Some of the platforms probably do that as well, but all these numbers are in US dollars. Revenue 53.8 billion. So a lot of revenue, quite a bit below that of Glencore. So Glencore obviously is or has significantly lower margins, And the main reason behind that is probably because Glencore is not in iron ore, and iron ore traditionally for BHP, for Rio Tinto and Fortescue has pretty good margins because they don't spend a lot of money to get the iron ore out of the ground. And when iron ore is pretty high, like it is right now, the margins are simply staggering. And that's why BHP has significantly lower margins or significantly lower revenue than Glencore, but has a significantly higher market cap. So revenue 53.8 billion, a little bit lower than last year. And to be honest with you, I'm not going to compare this year to last year, even though I've got the numbers here. Profit 12.9 billion, which was down 58% from last year. So again, it's really, I won't say foolish to compare BHP's financial performance to the previous year. You've got to look at the whole picture. Look at the last 10 years, something like that. Gross margin, 52%. That's pretty good for a mining company. Operating cash flow, 18.7 billion. Free cash flow, 12 billion. And that's really important for a mining company because you want a mining company to be bringing a lot of cash in their operations because it gives the management of a company a lot of levers to play with when it comes to capital allocation. And I'll talk about capital allocation later in the video. Net debt, 11.2 billion. Now, for this company, I don't really care too much about the debt levels unless it gets a little bit too high. So I don't really care that BHP has $11.2 billion of debt because without doubt, they're able to service that debt moving forward. BHP has 5.1 billion shares on the issue. Now, if BHP was a smaller company, a much smaller company, I would be concerned with 5.1 billion shares on issue, but it is a big company and 5.1 billion shares on issue is not an issue for me. Market cap at $45 is 229 billion. I should actually have a look at the latest share price for BHP because that is not the most recent share price. So share price for BHP right now, as I speak, the 6th of November at 4:28 p.m. is $45.44. So not much difference from $45. $48.5 billion equity. Now, one thing I will look at for all companies is changes in equity and not much difference in BHP's equity from last year, which was 48.8 billion. Return equity, return invested capital, actually quite good. 26.5 return on equity, 18 return invested capital. So nice quality earnings for this company. And dividend yield for BHP is 5.1%. I thought it might have been a little bit higher than that, but 5.1%. I'm just going to confirm that using CommSec. CommSec says 2.6%. I think that's wrong if I had a guess. So I'd say 5.1% is a little bit more accurate than CommSec's 2.6%. And the two most recent dividends totaled about $2.50, which would mean, dividend yield about 5% is right. So CommSec is on some drugs for some reason. Anyway, so nice dividend yield, nice return on equity, nice return on invested capital. In fact, if I saw that sort of return on equity and return on invested capital for a non-mining company, I probably would consider that company to be high quality, or more likely to consider that company to be high quality. So BHP does have some of the signs of a high quality company, but the only thing that is not leading me down that path of calling this company high quality is just simply because it's a mining company and they're a price taker. Now to the valuation for BHP. And to be honest with you, I probably wouldn't look at these valuation metrics. Again, this company is highly cyclical, highly dependent on the price of iron ore. And a perfect example is back in 2015, BHP share price was falling a fair bit and reached about a share price of about $12 in 2016. Yet the PE ratio of this company in 2016 was negative because it was unprofitable. But in 2015, the PE ratio of this company was about 50. Yet the share price was getting to some of the lowest levels we have seen in this company for a while. So that's one of the reasons why I wouldn't necessarily look at these valuation metrics for this company. In fact, you could say when the PE ratio is really low, that's not the time to own this company. But when the PE ratio is quite high or even negative, that's the time to buy because that's when you have negative sentiment in the company. So PE ratio 11.9, and this is when I had to adjust the earnings to Australian dollars. Price to book ratio 3.6, EV to operating cash flow 8.6. So they all seem fairly low, within reason maybe you could say. And also did a reverse DCF just based off the free cash flow What would the free cash flow have to grow from here to justify the current valuation? It's only 6.6% per year over the next 10 years. And I definitely think this company can achieve that. Even though I don't know this company absolutely bucked the front, I definitely think BHP can increase their free cash flow by 6.6% per year. Now, I don't think it's an absolute, simply because I have no idea what's going to happen with iron ore prices. Maybe in 10 years' time, iron ore prices are $30 a ton. Maybe they're $250 or $300 a ton. And if there are $300 a ton, and if they can keep managing to get the iron ore out of the ground at really low prices, then this company would have a market cap maybe double of what it is right now. So it all depends on the price of iron ore moving forward. And to be honest with you, there is some indications that there is going to be a pressure on iron ore prices in the future because of some Chinese iron ore mines in Africa. I'm not exactly sure when they're going to go into production, but that could have an effect, a negative effect, not only on BHP, but also Rio Tinto and Fortescue. And that will make sense later in the video when I show you where BHP derives most of its revenue from, or what country it derives most of the revenue from. And it shouldn't be surprised, there is one country well in front of every other country. And as we take a look at the financial history of this company, looking at revenue, cash flow from operations, and operating margins, you can definitely see the cyclicality of this company over the past 10 years. And sort of the low point in this company was back in 2016. That's when iron ore prices went as low as something like $40 or $50, and BHP share price went down to about $12. If I remember correctly, that was in January of 2016. That was a time to buy. When it looked like BHP's financial performance was, it was absolutely horrible, that was a time to buy. Because if you look at the period from 2016 all the way through to 2022, revenue increased from 29 billion to 65 billion. Operating cash flow increased from 10.6 million to 32.2 million. They also increased the operating margins from fairly low, about 10%, all the way up to 50%. Now, we have seen a drop in revenue and operating cash flow and margins in 2023. So possibly this is the new leg down. Who knows? We just don't know moving forward. If you know what iron ore prices are going to do in the future with absolute certainty, you have a distinct advantage over the rest of investors in the world. And to be honest with you, you should become the richest person in the world because you know something that no one else knows, and that's a massive advantage. So if you do know absolutely what iron ore prices are going to do in the future, please tell me. Send me a DM or something because I want to know. Now, one thing I like to look at for all companies, particularly those companies, in fact, only those companies that have different divisions or reporting segments, is a breakdown of revenue, EBITDA, profit of those different segments. I just want to see what the biggest segment or division of a company is. And for most companies in their financial reports, you will see a breakdown of this, a disaggregation, what they call it, in the notes section. So this is a breakdown of BHP's revenue, underlying EBITDA, underlying EBIT, assets and liabilities by different segments. And they have three main segments: copper, iron ore, and coal. By far, iron ore is their biggest segment. In fact, almost half of the revenue is derived through iron ore. They also have a group and allocated item section, which is about $2 billion of revenue. That includes potash, Nickel West, West Musgrave, and legacy assets. But by far, the majority of these companies, I shouldn't say by far, about half of these companies' revenue, BHP's revenue, is derived through iron ore. That's 24.8 billion. 16 billion of their revenue is copper, 10.9 billion coal, and 2 billion unallocated. Another thing a lot of companies will do when you see a disaggregation of revenue by segments, they also did do a disaggregation of revenue by geographical regions or areas. And BHP have done this. So they've broken down the revenue into quite a few different regions: Australia, Europe, China, Japan, India, South Korea, rest of Asia, North America, South America. And well over half of this company's revenue comes from China. 31.2 billion. Next biggest region is Japan with just under 7 billion, and then third biggest is rest of Asia with 3.6 billion, and then coming in fourth is India with 3.4 billion. So by far, the most important country for BHP is China. In my opinion, one of the most important jobs of the management of a company, apart from culture, is capital allocation decisions, or what to do with the excess cash a company generates in their operations. And some companies give you a decision tree like BHP did on page 32 of the presentation. So this is a capital allocation decision tree. So you start off with operating productivity, capital productivity, and net operating cash flow of $18.7 billion. Then you take away the maintenance and decarbonization capital, which is $3 billion. You take away the dividends, which is $9.1 billion. And this company has excess cash of $5.2 billion. What do they do with that excess cash? It's a very important decision, because if they make the right decisions, this company can keep on growing. And I think this is why, in my opinion, it is one of the most important decisions, because if they make the wrong decisions, this company could start decreasing in size. If they make the right decisions, it can start increasing in size. So what they do with that excess cash, they could do additional dividends, buybacks, improve the balance sheet, organic development, or acquisitions, those sort of things. So they go through that in this particular slide of what they're doing with that excess cash. Now onto the chart for BHP, and this is the monthly chart of the company going back to 1990. So we're talking about 33 years of history here. And this is a hallmark, or this chart is a hallmark of a high quality company when the share price is going from the bottom left to the top right. And this does not include dividends. If you go to TradingView and adjust the chart for dividends, it looks even more impressive. So this is just capital appreciation of the share price. So if you bought shares in BHP back in 1990, you have done really well over the past 33 years. Now, sure, there are periods of time the share price is under significant pressure. 2015, 2016. In fact, the share price of BHP fell from $40 in 2011. In fact, I was a shareholder of BHP. In fact, BHP was the second company I bought. I bought Commonwealth Bank, and then I bought BHP. And when I owned BHP, share price was about $40 in 2010, 2011. And then the share price fell from $40 to $12 over a 4-year period. I think it was even less than that, maybe a 2-year period. And if you're a shareholder during that period, you might have been a little bit nervous. But if you bought in 2016, particularly in the first few months of that year, you have done really well since then, because the share price of BHP has increased from $12 up to highs 40s. Not only that, you have been given a really good dividend from this company. So just by looking at this chart, and if I just saw this chart without knowing what the company is, I probably would say this company is high quality. This is a high quality looking chart. So the only reason why I would not define BHP as a high quality company is because it's a mining company, and mining companies are price takers. And we saw the effect of being a price taker in 2015 and 16 when the share price fell all the way down to $12. That is all I have for this look at BHP's financial year 23 results. The largest mining company in the world, the largest company on the ASX. And if you have a look at the financial performance of this company over the past 30 or so years, if you have a look at the chart since 1990, this could be considered a high quality company. And possibly this company, particularly if the management of the company keeps making some really good capital allocation decisions, this company could continue to grow from here. The only thing that would hold me back from buying a position in this company is that over-reliance on iron ore. And if something bad happens to the iron ore industry, the iron ore prices, BHP share price will suffer. But if it does suffer, if the share price of this company falls to say $15, I probably would maybe go all in if that happened. So if you have any questions about BHP, any thoughts about this company, I'd love to hear it. So leave it in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.